In this video, we are going to be analyzing Ticket AI. So this is for C3 AI because it has been quite a volatile move recently. So what are going to be these key levels that we're paying attention to? So for this, again, when it's moving on these big spikes, this is mainly just going to be down to kind of these hype moves, kind of these squeezes. So the main thing I'm focusing on is what levels do we need to break above for me to start paying attention to. So really that level for me is $27. Reason for that is you can see that is our first deviation over on the 6 month. Really, when stocks become up to this kind of level, they are considered a bit more overbought. We could potentially look for a pullback. So if a stock trades there a bit more naturally, this first one I tend to ignore a bit more. But if it's moving in these kind of, where we're just kind of snapping straight to them, then I'm paying attention to this level, because unless there's a fundamental reason for it to be moving, if it's kind of just on a technical break or a hype move, then once we're above this level, really, more than likely we are going to pull back below it. So really, I'm just looking to play a reversal from that level. Above that, obviously, we have the 28 as well. You can use these as a zone because they are quite close together, especially if we're getting these big moves and, a dollar in it isn't going to be too much. And if we did break above that, then obviously we cut the $32 and the $33 level. Again, using them as zones because they're so close together. And you can see this is kind of where we came to on that previous big move. And this one I think is really going to be that key one. The reason for that is you can see at $33, that is our third deviation on the 1 year. So, stocks come to their second, they come to their third, but they very rarely break the third. And so that's why if we're coming into a third deviation, that's where I really like taking the trade, or I may increase size, because the likelihood of a reversal coming into this level is just that much greater. Now, if we did break that though for any reason, we would be looking at $37/$38 as that next key resistance. So those would be those levels I'll be paying attention to. And again, if it's moving here, just, if we snap from 22 to 28 on a kind of a technical or just on a hype move, then this is where my trading opportunities will come. Again, I'm looking to play that short bias. Good thing with AI, they do have options. So that's really how I'm going to be looking to play it. If the puts are cheap, I'll be playing it through the puts. And as well as, obviously, the liquidity's got to be there. If the spreads are super wide, then they may not be all that great. So the other way I can look to play it, if the spreads are either wide or there's just not really much volume, then I could look to play them through credit or debit spread. So it's still using options, but we can look to play those options into expiry. So if we trade it, especially for a credit spread, obviously we want them to expire worthless. And all we need to say is we expect it to close below, $28 or $27. Or actually, if we look at the strikes, so we can say below $27 or $26. And in that case, then it's not too bad, because even if the spreads are kind of wide, we don't need to worry about getting out. We only need to worry about getting in, because obviously we can just let them expire worthless. On those kind of trades, if we're actually looking to take them into the expiration, I would probably be looking at kind of closer dated options, because obviously you don't want to be holding the position for really months on end. So I'd probably be looking for the 15 or the 8-day out expirations if it happens quickly, just because, again, from the previous 3 moves in this, we can see it really reacts quickly. And so, take it those shorter days, we can kind of increase, don't want to say increase the probability of it working, because the longer you go out, obviously the better chance you're going to have. But it's kind of just so you don't have kind of capital or the collateral kind of waiting there for a long time, if we can kind of just get in and out of them relatively quickly. So that's what I'm paying attention to on AI. Again, those resistances are the key ones. If we break to the downside, we do have support from around 16 to 14.50. But again, don't think this stock's all that important to the downside. It's just if we squeeze, try and get that reversal play. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe? If you want some Lumley trading merch, it is in the description. Otherwise, I hope you enjoyed the video. Why don't you check out this one, and I hope to see you in the next one. Peace.